Hey, this is Sasha. Thanks for joining me in today's video. And what I want to answer today is how many different types of option trading strategies really are there? So stay tuned if you ever really wondered about this question, thought about it, and how many do you need to know? I'm going to give you some thoughts and insights in this video right now. All right, so a lot of people have and look to different types of strategies thinking, hey, why don't I try this trading strategies and maybe that one will make me some money. And it may not work out for you. And then you go ahead and hop to another strategy and hop to another strategy. And you continue this kind of process time and time again until you find a strategy that kind of works for you. And ultimately, what you don't realize and recognize is all these strategies kind of work together. It's all just about tweaking these strategies. And when you really look and break down how many different types of strategies there are all kinds of different strategies out there. There's probably hundreds of different types of strategies when it comes to trading options. And then on top of that, if you go ahead and try to manage those strategies in your own unique way, now you get into thousands of different variations. Ultimately, though, to simplify things, there's really only a handful of different strategies. And let's take a look at that here in just a second. Before we get going in there, I want to remind you that we have an option trading strategies book that's coming out soon. It's going to come out February 24th. So very, very soon, near the end of February as we wrap it up. And we also have a new course, Understanding the Stock Market, How It Works, version 2.0, getting re-released. Now, with that in mind, let's go ahead and check out Amazon here. And as we go ahead and put on a trading strategy, if I go ahead and I buy something right here, you can see that there's a handful of different strategies on here. So what I could do is go and buy a single, buy a vertical, back ratio spread, a calendar, diagonal, straddle, strangle, covered call, collar or synthetic combo, butterfly, condor, iron condor, vertical roll, collar with stock, double diagonal, and unbalanced and deep and wide. So you can see there's a handful of different types of strategies out there. So if you really look at them, there's a ton of variations out there. And remember, not only can you just buy these, you can also sell these. So not only do you have the initial buy, you also have the initial sell. And you have balanced, and you also have here, as you look at it, there is unbalanced, unbalanced butterfly, condor, iron condor, vertical. And when you start getting into this, it starts to become confusing because when you start getting into unbalanced, well, people will make up names for these different types of strategies. Like an iron condor is a four-leg spread. A butterfly is kind of where the strikes are in the middle, but really it could be an iron butterfly that people also talk about. So it's just names to help identify the strategy as we communicate as humans. That's really all these strategies are. The baseline, of course, when you look at trading options, you're looking to be a net seller and you're looking to go ahead and make money from the premium of the time decay. Now here, of course, as you get into it and you look at an unbalanced iron condor or an unbalanced butterfly, what you're starting to do is shift things. So as you add and stack more contracts or different strikes and different spreads on one side or the other, it becomes unbalanced. And how do you know if you want to call a one iron condor instead of skewed? You could call it a warped. You could call it like a shotgun because you could set it up to where it looks like a shotgun. And that's really what it comes down to. But as far as the strategies that you have to know, I want to share those with you right now. There's really only a couple of baseline strategies. And when I look at it from the stem, okay, so your core strategy that you're looking to do is you're trying to sell option premium. So here's kind of your straddle that you're trying to sell. And then if you're going into the world of iron condors for protection, well, what you do is you buy that protection here. And now this is the risk profile picture that you're looking at. And for those of you that are new, this is your profit. And this is the stock price. And what happens is the stock price over here gets higher. So this might be 200, this might be 100. So as it wiggles, that's what it looks like. And your profit here, of course, might be the zero line over here. And then this could be like 500 over here. So ultimately, when you look at this now, I could go ahead and create different variations of this. I could go ahead and skew it a little to the upside. So that's where it kind of could look like, hey, a gun, a car. So is this a car strategy, race car strategy? So for everybody, it's a little bit different naming conventions, but ultimately the concept is the same. The main strategies that you'll want to look at when you're getting started in trading options is there's kind of 4 main strategies beyond, of course, that first initial one that we talked about. That's a foundation. So you have a positive Vega strategies and you have some negative Vega strategies. And the ones that I always recommend you kind of learn is when you look at negative Vega, this is your Iron Condor. So that's the Iron Condor strategy. And then you look at it and here is your butterfly strategy. So these are all in the same months. That's why they're negative Vega. Positive Vega, when you look at it, here is kind of your calendar. And then what you look at is maybe you have a diagonal or it could be a double diagonal. So from these strategies, you can do all kinds of different things. So what is it that you could do? Well, a calendar, you could go ahead and convert into kind of like a double calendar, okay? You could convert it into even a triple calendar. You could skew it. You could have one here and like 2 or 3 contracts on the a little bit further out. Diagonals, you can convert into a double diagonals. So that'll look very similar to this. You could skew those diagonals even more like to the upside. You could skew them to the other side. With Iron Condors, as we looked at, well, you could put one leg a little higher or this leg a little higher or lower. So you could really create something like, something like this, or something like, let's say, higher on the other end and lower on the other side. Butterflies, the same thing. You could skew one leg where it's broken wing, they call it, this way or the other way. So from there, from these 4 strategies, you can really concoction and create all kinds of different things. So I don't want you to get too wrapped up into all these different strategies where you have, a list from your broker platform, because here you might have 12 to 14 different variations and then more variations on top of that as you dig deeper into it. But remember, as you get into it, there's so many different ways that you could go ahead and tweak them. It's really about learning and understanding how options work that really then you go ahead and like, let's say here's a diagonal, and we'll go ahead and analyze this trade on Tesla. And now you're really learning how to tweak them, these different strategies from the baseline. So here's our diagonal. And now, well, do I want a little bit more bullish or bearish? And now what you can do is slowly start tweaking it or rotating it if you think it's a little more bearish. And that'll change your position and outlook. And then what you can do is stack multiple things on top. So let's say, okay, I got one contract here, and then I could go ahead and stack a second one on the put side, maybe over at the 440 over here. And now I have more of a double calendar or double diagonal version. So that's what I want to share with you today, is that don't get too complicated and wrapped up on how many different strategies there are. Look at kind of the 4 basic ones that we've shared here: calendar, diagonal, Iron Condor, and a butterfly. And from there, things really stem into all kinds of different variations. With the Iron Condor, remember, it's kind of broken into 2 verticals. So if you're brand new, that's kind of like a vertical baseline. And an Iron Condor, ultimately, if you take these 2 edges and you bring them together, that is your butterfly. And you can do that with a butterfly. It's called an iron butterfly, is the typical name for that. So again, it's just different names, different conventions. But as far as the trade goes, it's not too much different. All right, so I want to go ahead and remind you about the upcoming course and the option trading strategies book that's coming out. Make sure you get on the newsletter list, because if you're not on the newsletter list, then you can go ahead and get notified when this is released along with the discounts. And definitely check out the Traders Fly website. This is where you can get on the newsletter list by clicking kind of the link here, get signed up, and you can also ask some questions by audio. So if you are struggling a little bit or you want to submit a good detailed question, just go ahead and record your question. You can be featured on the show or a podcast. Anyways, thank you so much for joining me. Remember to hit subscribe here by clicking the face icon right here. or join us on our newsletter list by clicking the link right over here, and it'll take you right there to sign up, so that way you get notified as we release new classes, material, books, courses to help you out. Thanks again, and I will see you next time.